Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Friday the 13th of June. Starting off with the FTSE, which has obviously responded to Israel's attack or attacks on Iran. Presumably the real pain could come with if and when we see retaliation, and maybe the market would be down more then. But at the moment, still above the old resistance at 8,800 and above that, looking for 90.30 or so by the end of next month, which is the top of that rising trend channel. If we do break down, as we've said before, the rug pull level would be towards 8,700 on any end of day close back below 8,800. Moving along to the situation at the DAX, which like the FTSE also already had bearish divergence in terms of the RSI before the latest falls. We gapped down yesterday and we gapped down today, which isn't very nice, and also we're back below the old March resistance at 23,500. Need to close above that in order to avoid a 50-day moving average target there at 22,800. All of this something we were sniffing and smelling, but hoping obviously it would not happen. Moving along to the situation at the Dow, and here obviously again another market which is a bit behind the curve. We have failed at 42,800 effectively several times, which means that there's a risk of a move down to the floor of that channel. 42,000 and below that the 50-day line 41,100. Again, this is something we rather sniffed in recent days, just because the tariff news has sort of faded, and we were in a bit of a limbo situation, which has been obviously filled by Israel-Iran. Moving on to the situation at Bitcoin, and here, as is often irrationally the case, it's a sort of risk-off move we've got here. Back down to the 50-day line, which was something again factored in, so that was around the 102,000 level, and we're actually well above that, so we bounced well for the second time so far this month. Still hoping for an end-of-day close to 110,000, otherwise the downside risk here probably towards 97,000, which was the initial May resistance. Moving on to the situation at gold, which is clearly been a winner with the geopolitical angst that we have at the moment. We were looking for an end-of-day close, or have been looking for an end-of-day close through 3,400. Currently above 3,400. This is obviously from yesterday, and you can see that the market was almost limbering up for a potential geopolitical splash. Above 3,400, looking for not only the April resistance, which was 3,500 dead, but also up to 3,800 as soon as the end of next month. That prediction now that looks rather less ridiculous than it did even 24 hours ago. Moving on to the stocks, and a rather disappointing selection, but an amount of stocks at least which are looking exciting at the moment, but at least in the case of our exploration, we've effectively got a bear trap island reversal, so we gapped down in February, gapped up today. And on share buyback news, minimum here was 21 pence, which I think was already called for previously at the top of that falling trend channel at above 21 pence on an end of day close basis, looking for 28 pence by the end of next month. Haven't looked at block energy for a long time, and you can probably see why from the chart, because the share's been dead as a dodo, but we still have a recovery a sort of plan in place, and best case at the moment up to 1.25 pence maybe over the next month, while we're above the 200-day line currently at 0.83. Ideally, we stay above that 50-day line at 0.97. Cell AI has been a rocky ride. As you can see, we overshot the target we had there at the top of the rising trend channel, so that was around 0.6, and did that by some decent distance. The question now is whether we're bouncing again, basically above, at and above the old initial 2025 resistance around 0.37. Above that, looking for 0.6 pence again on Cell AI. Challenger nearly managed to get back into profitability, missed it by $1 million, which after losing 13 million the previous year was quite a result. So we've got a rising trend channel here, top of the channel there, heading for up to 13 pence, looking for that by the end of next month. If you're cautious, you wait for an end of day close back above the 50-day line at 8.7 pence, but bear trap rebound from below a rising 200-day line looks like enough of a signal to suggest 13 pence is on its way near term. On to Deltic, and here the situation is that shares are up, but it's been basically a sideways situation over the recent past, and still need to get through that 200-day line area around 5.5 pence properly. If we can do that, then the target here up to 9 pence by the end of next month, but still early days on that. On to EARNZ, which I don't think I've charted before, largely because there wasn't actually much charting material, and also the shares just went straight down. Current situation is that we want to see end of day close above 5 pence. If we can do that, then it could be 7 pence by the end of next month after the latest news the company's had. Haydale is next, and here a rather surprisingly strong situation. Obviously the initial target here up to the 200-day line and that red resistance line projection 0.15, then we pushed it up to 0.19. Best case then was 0.28, and we've blown all those targets away. Current position is that above the old July-August peak from last year at 0.4, we're looking for a final leg to the upside, and that would be up towards the old highs there from the beginning of last year, as high as 0.5. So above 0.4, looking for 0.5. On Haydale, there's also a gap to fill up to 0.44, which is almost been done. Moving along to another stock which I hardly ever look at, and I don't think anyone else does either, which is Kosmos. But here, rising trend channel base, nice gaps through there, even though it's very liquid, looking for up to £2.12, while we're above recent resistance around £1.52. So not a bad risk-reward situation on that situation, or that stock rather. Moving on to Karelian, which was yesterday's star, and here we have found, we've done what we would have liked, the shares have done what we would have liked them to do, which is find support to the 200-day line 1.08, above that. Looking at the top of that broadening triangle at 2 pence by the end of next month. Very nice to see the follow through after the big spike that we had yesterday. On to Metals One, where obviously the rug was finally pulled and has remained quite pulled, but we were looking for an end of day close back above the 200-day line. It's around 10 3/4 pence. Above that, looking for basically 15, 16 pence, even if the shares then fall away again. Obviously, the key here is to hold the main support for the stock around 7 pence, whatever happens. On to Team Internet, which a bit like Haydale has been a surprise riser, a very, very aggressive riser as well. The initial target there around 16, 17, then 25. Then 30, and now we've got what could be the final target over the near term up to 42 pence, which was and is post 2023 resistance above that, and certainly is totally back in the game. Upside value while we hold above the old peak there from back in April, around 32 pence. Finishing off with Zanaga, and here not quite sure why I'm so enthusiastic about it, but here we have a rising trend channel. Slow price action, but 14 pence could be on the cards by the end of next month if we can make progress above recent support at 8.4 pence. The other point to note is we've had bounces for the RSI at or above neutral 50, which tends to be a leading indicator on the upside. That's it for me today. More updates over the weekend.